Oh man, can we catch a break in this crypto market? Bitcoin falling 0.66%, altcoins continuing the decimation which started yesterday, FTX liquidation rumors worrying markets, Ethereum falling, we had the Vitalik hack, we cannot catch a break, and a couple of days away, we have some critical catalysts to break down, plus Bitcoin creating a very worrying pattern in the charts, which I need to break down for you as well. Smash up the likes. Don't forget to subscribe if you appreciate these updates, even when the markets are this painful. Smash up the likes and make sure you're supporting this content. We'll start off with Bitcoin before moving across to the whole FTX saga, because I need to break down exactly what's going on. A lot of FUD out there, and I want to share my viewpoint on what's going on. Let's first start off here on Bitcoin, and I'm going to pull off the 200 moving average and the 50 moving average. If any of you have taken my TA course, ijaz.uk/TA, straight away, staring you in the face, you see what is known as a death cross. A death cross statistically normally shows that we're going to have a big movement to the downside. Remember, we've been consolidating here for a while, ignoring these crazy 2 days here. We've basically been a stable coin here moving sideways. This is a consolidation move after a big move to the downside, which normally prepares you for a bigger move to the downside. These moving averages are now showing us exactly that. The shorter term 50 moving average is crossing down beneath the longer term 200 moving average, and that is a sign of a death cross. Not great. Important to know that statistically these death crosses, or the opposite, which is called a golden cross, don't always play out, but it's important that you notice it, you identify it, because it can be a big precursor for another extended move to the downside. The other way which I like to look at it, which is how I show you guys, is I love to pull out the EMA ribbon. And you guys know here, when you look at this EMA ribbon, you can see that it flipped here and it started extended. And now we're moving here below our exponential 200 line, this blue line, and setting ourselves up for a bigger pain to the downside. If you look at the weekly one, you will start to see on the weekly EMA ribbons, the lines are starting to cross over each other. And this is a big sign that you're about to get a more extended move to the downside. Fortunately for us, we're just about holding the 200 weekly exponential moving average, but how long can that last for when we continue to have fears like this one here about what is going on with FTX? Apparently, we're going to get billions of dollars of liquidation in the market. Let's actually break down what is going on. So this all starts off with Wednesday. The FTX and their liquidators will be appearing in Delaware bankruptcy court on Wednesday, September the 13th. That's 2 days from now, right? And they're going to request to approve the liquidating of $3.4 billion in crypto and other cryptocurrencies. We need to understand this point first. So let's jump on over to this document here, which was provided. And this was as of January 17th. So this is the one that's circulating everywhere on Twitter, which does give us a good breakdown of the tokens affected. You got a bunch of Solana, they hold a bunch of FTT, of course, Bitcoin and Wrapped Bitcoin, Ethereum, Aptos, Doge, Matic, Ton, XRP, stablecoins, and a mixed bag here on third-party exchange as well. So we can see coins are affected, but I need to give you guys a bit more context. This adds up here to about that $3.4 billion mark, but you have to look at this. They found more assets since then. If you look at this chart here, this is the latest reading as of here. And if I show you this, you can see as of April the 12th, and maybe there's even more now, the bar on the right-hand side, there is actually $4.3 billion of crypto, category A crypto, that they have available. So they found 1.8 by November the 11th, 2022. By January of this year, they saw that it was actually 3.4 billion, which is the number everybody's quoting, but really there's 4.3 billion from what I'm seeing that could be liquidated. Now it's important to understand what's going on here. So they brought in Galaxy Digital, which is of course run by Mike Novogratz, big in the crypto space, and they apparently want to be using him and his firm to help with the liquidations, to manage the liquidations, because you've got to do it very carefully. You can't just gung-ho throw all of this in the market like everybody is fearing. That's not what's going to happen. It's not in the interest of the crypto market. It's not in the interest of the people liquidating, right? What's the point liquidating, dumping the market, and then you're going to have to sell the rest for a lower price point? They want to do it sensibly and make sure that whatever they liquidate can be absorbed by the market, other people can buy it, and it's done very organically. So you can see here in the early structure of when they listed this out, they did have some rules in place, and those rules stipulate that you can only sell 100 to maximum of 200 million in any given week. Okay, so if you see here in this plan, the FTX estate would only be permitted to sell a maximum of 100 million worth of its tokens each week. However, that limit could be raised to 200 million on an individual token basis. Now, let's take a look at one of the wallets, right? So if we take a look at one of their Solana wallets, you can see the kind of tokens that you've got listed here. So straight away here, you can see they've got a bunch of Solana, they got a bunch of Maps token, there's a bunch of wrapped Bitcoin, you can see a bunch of Oxygen, Ethereum, of course, Media Network. They've got a bunch of different tokens, and there's a couple of these cold wallets which we know which are public. There are others which we don't have access to, so we don't know the exact number of which asset they have. But as a stress test, if you want to take a look at it and you want to understand how could this affect the markets, well, let's use the hypothetical example that they actually sell all of the tokens in one go, right? If they sell everything in one go, if you're looking at the current market cap of the crypto space, we're talking $24.7 billion in volume is absorbed every single day, changing hands. So if, and I'm not saying this is happening, if the whole, and we know it's not happening actually, the whole $4.3 billion was dumped into the market, okay, fine, that's going to be very, very painful, right? We're going to feel it. But if this is done in tranches of 100 million and 200 million at a time, spread across different coins, each token should be able to absorb that, because they're not saying they're going to do 100 million of Solana in one go, right? Each one should be able to absorb that, and they should be good. I mean, if you look at this and put this into perspective, Solana's market cap here in the bear market is sitting here at 7.3 billion, right? There's 410 million transfer volume in Solana every single day in 24 hours, right? So if all that $100 million was Solana on one day, that's a quarter of the current trading volume. It's not actually as crazy as a lot of people want to scare you to think. So we are seeing prices dump here. We are seeing certain altcoins bleed, but generally there is a risk-off appetite. Fortunately, today we've got the dollar index falling to the downside. You can see here that is falling down 0.43%. And that is allowing the traditional markets in the pre-market here to move to the upside. Nasdaq benefiting from this risk, rotating slightly on today, up 0.84, 0.55 on the S&P, but we just cannot catch a break here on Bitcoin. Bitcoin still dumping down 0.6%, even though the dollar index is having a little bit of a cooling off. But you can see here, Bitcoin dominance is rising. That naturally happens. Altcoins are bleeding much, much more than Bitcoin. Many altcoins down over 2-3% here in the market. I mean, if you take a look here, you've got Render falling down 3.4% despite having a decent day yesterday. Avalanche down 2%, Matic down 2.8%, Solana down another 2.5%. You can take a look at Optimism down 1.5%, Near Protocol down 2.2%. It's a tough time in the market right now, and this kind of FUD around the FTX issue doesn't help as well. But that's not it. There's other catalysts this week as well, and those other catalysts include critical data, which affects whether the market thinks we're going to get an interest rate pause or not. So we will get CPI data on Wednesday. Thursday will give us critical PPI inflation data, and this is what we're going to want to monitor. Does the market still think after those pieces of data on Wednesday and Thursday that we're going to get an interest rate pause by Jerome Powell and the FOMC on September the 20th? That is 9 days time from now. We get the next FOMC meeting. Markets 94% are pricing in that we're going to get a pause. That being said, markets still do believe we're probably in for another rate hike. You can see here, 39% of the market expects that by November, which is the meeting after. It's quite soon after the September one. No, in November, we're expecting a 25 basis point rate hike. So people are still expecting we could be getting one or maybe even two more rate hikes before the end of the year. And markets are going to have to price in that pain, because previously, a few months ago, they thought we're going to be done here at around this level of 5.25, but it appears we're not quite done just yet. So there you have it, guys. Tough day in the markets. Yes, FTX will be looking to liquidate their assets, but it's always important to actually break down the numbers and look at the actual effect. I mean, whenever you have these dumping effects, whether it's the US government, whether it's Mt. Gox, you actually got to look at it and see what is the amount. Don't just assume, oh, somebody's selling, it's going to dump the market. Crypto is a decent asset class. There still is. I know we're in the midst of a bear market. There's still $1 trillion in this market. So you need a substantial volume to really shake and move this market. Of course, the leverage doesn't help. And that's ultimately the biggest enemy we have in crypto, is people with their overzealous 100x longs, 100x shorts looking to get wrecked. And that's why in crypto, even though it's $1 trillion market cap, if you move it a couple of percent, it can create a cascading effect of liquidations, which is why we get those crazy red candlesticks. But oftentimes when that happens, you quickly see people buying those dips in, and you do get some price stability thereafter. So for me, not hugely panicked. If I do see dips to the downside, particularly on Bitcoin, I've shared in my previous videos over the last couple of days where I'm looking to buy the dip. Make sure you go get caught up on those. Don't forget to go watch this video here, and I'll see you in the next one.